Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, today looks like a bit of a tough day. The Hang Seng index is now down 518 points. Just see the Asian markets. They've actually extended losses. The Hang Seng is now down 2%. Nikkei, of course, part of the developed markets, down 1.6%. Shanghai is down about 1.5%. Actually, the SGX Nifty is indicating that perhaps India could outperform, at least for starters, in this kind of market, because we are only down about 0.5% as far as the SGX Nifty is concerned. 11,362 is what we have. Ashwani Gujral, Sudarshan Sukhani and Prakash Kaba with us this Monday morning. Good morning, Ashwani. What's the first trade if we open about 50-60 point lower given the global context?
Well, good morning, and 11,500 has held on. Now the issue is that on a morning like this, everybody is depressed and the market will open lower. So first trade, trying to go short, I don't think is a very intelligent trade. We did take short positions home on Friday. So maybe today morning, it's a good time to cover them a little bit. I wouldn't be surprised that if you get a second half rally for some reason, not that the problem is going to go away, but there is a pullback globally and US futures start to turn, etc. So for me, that is the intraday trade where everybody gets trapped in the morning and you don't get follow through and then you see a rally back. Overall, you could get to 11,250, 270. But given that we fell in the last hour on Friday, plus we'll be down today, I don't think incrementally intraday there's a short trade.
Okay. Well, fair point. Sudarshan, good morning to you. What's your trade today?
Good morning. Well, Lata, today is another day. So far, we have been buying the dips and doing it successfully. But this is not a dip anymore where we want to buy it. So the idea is that we do not know if this decline that we are now witnessing is a shallow correction or something deeper. It is a correction of some kind. And it's not a dip where we want to go long. So step aside from this market. Intraday, if you actually have a rally, then you can consider going short, maybe. But I don't know about that. I'm not going to buy any dip today, whether it's now or in the afternoon, and I would not like to carry long positions. So this is a day when we simply avoid.
Okay, avoid this day. In a bit, we'll get Prakash Gaba to join in as well. But let's quickly run through some of your stock ideas as well. Sudarshan, what would you be looking at this morning?
Well, I'm looking at selling the weak mid-caps, and there are plenty of them, and there are strong ones. But the day today is to go and short sell even after the gap down. So UPL, which is a relatively weak stock, it had a one big day and then it started drifting. There was no follow through. Chances are it will make lower lows. UPL is a short sell, and so is Ujjivan. Ujjivan had a very bad day on Friday. It broke all kind of support levels. That decline is likely to continue. So Ujjivan is the second short, and the third is my favorite short sell, Tata Motors. Tata Motors is not stopping here. It's at new lows, and the chances are it will go much lower than we imagine. So three short ideas which you can take just after the markets open and stabilize. There is more downside here. Two long ideas which you take only if the market stabilizes sometime during the day. One is UBL and the other is Strides Shashun. Both of them are outperformers and not part of the sectors that get influenced by world markets. But wait patiently for them.
Okay, that's a fair point.
So when you hurt a lot, you take a lot of liquor. So maybe buy UBL.
Yeah, Monday, but let's see if Monday is a good day to buy liquor. Ashwani, just a word on this Bank Nifty move as well, because there's going to be, of course, impact to an HDFC Bank. We saw SBI was very volatile on Friday. How would you approach that index and the components over there?
See, it's had a 2,000 point rally, so you will give back significantly. But the give back may happen early in the morning, 250, 300 points down, and then you start a rally which almost gets back to unchanged. That is the sort of view I want to take. HDFC Bank, if for 1% resigning, now it's going to fall 5%, then it's not the HDFC Bank I thought it was. I mean, these are institutions. So SBI, again, you know, this was expected. I mean, nothing works out in 3 months. So both these guys are in corrections, and maybe second half could be a different story, because the market is going to correct significantly at the open itself. So 10,350, 370, if we don't break that, we could be setting up for a 50-70 point upside. So banks, corporate banks will correct, but today somewhere by afternoon there could be some amount of buying which also comes back, because the rally was very sharp. So anybody who was buying at 11,500, I think by afternoon there could be short covering even on these banks.
Okay. And your stocks?
See, Tata Motor DVR remains a sell with a stop of 145, target of 132. Canfin Home is a sell with a stop of 325, target of 310. JSPL is a sell with a stop of 208, target of 192. Berger Paint is a buy with a stop of 324, target of 338. And Jubilant Food is a buy with a stop of 1500, target of 1545.
Okay, well, due to paucity of time, let's get in Prakash Gaba and get his views both on the index and on individual stocks. Prakash, what are the stocks that you're looking at and your view on the Nifty?
Well, Nifty, I would say that, like I said on Friday, that 11,500 was a stiff resistance we achieved on Thursday. And on the way up, we saw 2 gaps and 6 days of an up move. Time for a correction was ripe on Friday. That's what we saw. Now, maybe some more sluggishness is expected. Strong support in the vicinity of 11,385 or 11,360. If he opens the gap down, it goes down. I think we are likely to find support in the vicinity of 11,360. Having said that, it can climb up from there. As far as Bank Nifty is concerned, 28,000 seems to be a psychological support, maybe a bit lower than that. But I think we could see a bounce in the later part of trading session in the banks. I have 3 buys. I'll go with Berger Paints, did very well on Friday. I think it can climb to levels closer to 350 zones. So dips until 320 are buying opportunities on Berger Paint. Eicher Motors did again quite well on Friday itself. Looks like it can go up to maybe around 30,000 zones. A dips until 28,500 would be a buying opportunity with a stop below that. Kotak Mahindra Bank is trading at support. So if it opens the gap down, looks like we could see an up move here. Or if it survives 1270, I think a buying opportunity exists there. Maybe target of 1310 on the upside. Stocks that look weak, Canara Bank, exhaustion. Looks like we can see a slide to 270 zones. Stop above 295.
Thanks a lot, Prakash. Vinod, good morning to you. Sorry, paucity of time. Your stocks?
Yes, my stocks. So Axis is a buy for me because it has come at a 2-year, almost a trend line, which is since almost a 2-year trend line is there. It is now placed there. You close at 626, it breaks above that. So I'm buying it current 620 call at 14, stop loss at 9, target of around 25. IDFC is another bank when I'm being a brave heart and buying. I'm buying the 42.5 call at 2, stop loss at 1, target of 4. Infosys is again a buy, essentially because the rupee would open slightly lower, around 50 paise. I'm buying the 1400 call at 20, stop loss at 13, target of 35. And I see a slight correction in the Bank Nifty because of a negative divergence. So I'm having a bearish call only for the weekly Bank Nifty. I'm buying the 28,000 put at around 91, stop loss at 40, target of around 200. And my last call is on ITC, where I continue to be a buyer. 305 call I'm buying at 6.2, stop loss at 4, target of 12, and we don't see the Nifty going below the level of 11,340.
Okay, thank you very much, Vinod and Prakash, for joining us. We have to take a quick break. When we return, we are going to focus on some very important earnings. Mr. Velumani, Chairman, Managing Director, CEO of Thyrocare Technologies. Welcome back. Well, let's quickly run through several numbers that we got. Thyrocare, they announced numbers over the weekend. It's kind of a mixed bag. It's a 11% growth in revenues. You wouldn't have complained for any other company, but you complain when it is Thyrocare because we've got used to a 20-25% growth. Of course, margins are very high still. They are maintained at 42%, better than last year, same quarter. Mr. Velumani, Chairman, Managing Director, CEO of Thyrocare Technologies, with us in the studio. Hello. Good morning, sir. Thank you very much. Well, this is the first point, really. We don't complain for all companies at 11%, but for you, it falls short of expectation.
Yeah, last year also we had around 17% growth, which was less than our 20 mark. And we had to correct prices because the growing competition is very much around. And we have a good EBITDA. So we wanted to correct, and we did correct in the 1st of May. April we didn't do. So 2 months of price correction. Then generally when you do a price correction, it is like a hockey stick effect. The top line goes down because you have corrected it.
Yeah.
And then corrected prices will give rise to volume probably in Q3 and Q4. We do expect Q2 to be also somewhere around the same numbers. But I think the year ends, we should have back to 20% growth, plus growth. Okay. But when I analyze my last 5 years, still I have got 21% CAGR.
Okay. The last time when we spoke with you post the Q4 numbers, you said you're expecting 25% revenue growth in the coming years. So is it fair to assume that you are scaling down your full year guidance because of increasing competition?
No, I was thinking 25% will be fairly simple. But then now it looks like a lot of correction need to be done if you want growth. And fortunate for us, we have an EBITDA, which I want to trade off intelligently, not to just dilute it. So we will be doing a lot of experiments in strategies. We have increased our HR's count. Probably we went very slow, thinking that it's as such doing 25%, why we have to stress. I think this year we have added a fair number of headcounts. So that also would result in 20 plus. I am hoping this year will end.
And what are the price cuts that you have taken up until now, and do you plan to do more?
We won't be doing it more until we see what impact this has got. And we have raised prices in some of the items where we had over diluted earlier. And some of the profiles we had a huge margin. That is where the competition also was punching through. So we have put in some plugging, and its impact will be seen only in Q3, Q4, not even in Q2.
Okay, if you're increasing HR and cutting prices, I mean, you may not do more of it, but will you be able to hold margins above 40?
I think above margin 40 is little unnecessary. Growth, if it is sacrificed, I don't think people should stick to...
if margin is sacrificed, you don't mind if you get growth?
35 plus is what I expect if I want 25% CAGR.
Okay, fair point. What about this imaging business? It's turned around, it looks like. Will it start giving you more money?
Will not give me money because I have not stopped new centers. All new centers will eat away the EBITDA of the existing performing centers. So that journey will continue probably another 2-3 years in a growth mode rather than an EBITDA mode. And we think that is going to take its own time.
What about the wellness business? I mean, the growth has been pretty good, but that's attracted a lot of other players into this space as well. Are you seeing a lot of competition there?
I think my people have been telling, don't be so vocal in television channels. But then truth is truth. Wellness is growing. Wellness has profit. Wellness is an elastic market. Yeah. And unfortunately, all my competitors have identified themselves as pathology laboratories. I have named my company as Technologies Limited. So I have been a little ahead in wellness. And people see that that's truly tomorrow. And everybody is branding there. And everybody is approaching it to the customer. And growing lifestyle disorders is certainly a big market.
Okay, so growth rates for two businesses, the imaging business and the wellness business, what do you see? Because the last time I think you had said that imaging, the revenue target is about 300 crores by FY25, if I'm not wrong.
FY25 is pretty long. That 300 crores is wait and seen. Okay. How aggressive we move ahead. Unfortunately, in this country, even at that lower price of PET-CT, consumers are not ready to spend 5-digit. Okay. It's 10,000 what I'm charging. So it will take its own time. Number of oncologists in the country are not that many. Burden is enough, but not truly consumption. So that it's going to take its own story. But wellness will take us ahead. We believe that that will be our growth engine. All
right. Sir, thank you very much for joining us and dropping in our studios. So that's the message coming in. There will be a little bit of sacrifice of margins, not above 40%, but something around 35 is what the company expects, but they will be able to report back 20% growth in revenues. We take a break on that note. We are coming back with pre-opening rates. SP Tulsian of sptulsian.com will also be joining in.